Hi. Too many contradictions have begun to appear in the world financial system, and these, I believe, are going to cause a lot of turbulence, are going to come and rattle stocks very soon once again. What's going on the world scenario? Let's examine quickly. On one hand, you see headlines in newspapers say that S&P 500 has recorded for the ninth time a winning streak. Now let's go back and look at what it has done for this quarter, the first quarter of 2015. It is up, but just a paltry 0.35%. Is that supposed to be a big gain to make headlines? Now, what's going on as far as the US dollar goes? As I have pointed out many times before, the dollar's strength is going to lead to certain weakness in the US economy because as your currency begins to strengthen, it's going to impact jobs. The people who are exporting will find that the product is becoming less competitive in the world scenario, and because of this, they will be exporting less, and this will consequently go and impact the jobs situation in a country. That's exactly what is expected to happen. And the biggest indicator of this is the trade data, which is expected to be released today. Now, if the trade data is widening, that means that the deficit is widening in a world economy or in that particular country. In the United States, the trade data is expected to narrow because although the imports are falling due to oil prices coming down, exports are also beginning to fall because of the US dollar being so strong. In the face of such a shrinking trade data is indicative of a weakening economy, weakening exports. GDP numbers could also start coming down. And as a result of all this, you will see employers begin to cut back on jobs. There'll be fewer jobs. So the jobs report will also show that the employees are probably hiring less now. Now, that's not very good news for any economy. Everybody likes to be at as high an employment level as possible. So if you start seeing employers cutting jobs, that's a negative sign. However, people forget the fact that this could be a little positive as well. If the jobs are beginning to slow down, or rather the hiring is beginning to slow down, this is indicative of another fact. It indicates that the US Federal Reserve, which is so much keen now to start raising interest rates in the face of a strengthening economy, will slow down, will not do it as quickly as people anticipate. That means that the easy monetary policy of the central bank is expected to continue then. If that continues, the US dollar will start weakening. So you can see there are too many contradictions in the world financial system, and this all will lead to a lot of turbulence. There will be anxiety, confusion, and whenever there is a state of confusion and anxiety, the world stock markets do get rattled. I expected this confusion to increase by the middle of April, and especially in the month of June, it's going to be very difficult for world stock markets as per my model formula, which is tracking lakhs of parameters, trade data, inventory data from all over the world. So in this scenario, there's the calm will take quite some time to enter to re-enter back into the world stock markets. Until then, you will see them getting rattled, and investors, although have been making good money in Europe, for example, but that is entirely not because of a strengthening Europe, but because of the quantitative easing that has been unleashed by the European Central Bank, the ECB. So do not get carried away that just because of the easy monetary policy, the too much liquidity is flowing all over into Europe, and that is causing this rise in the European stock markets. But I believe personally that as I'm outlining the time frame within which I believe the confusion is going to start increasing in prominence and is going to rattle world financial markets. In this, I do include Europe as well. And Europe could get hit pretty hard because it has risen the most. Because don't forget that people invest on a global basis these days. So whenever there is anxiety, increase in anxiety, and confusion increases, the market players are going to go and sell first in that country which has risen the most. And Europe has risen the most this year, don't forget. So the DAX, the CAC 40, and the FTSE are more susceptible in the event of a downturn in world financial markets. So do time your investments accordingly. The contradictions will take some time to fade away. Until then, you will find periods of great turbulence, some rise, more fall, and I do not expect 2015 to be great, but at least the first half of this year will continue to be negative and turbulent as well. Take care, happy investing. Bye.